Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. 31st of March, last day of the quarter, last day of the month. Stocks hit a 7-month low in the Nasdaq. Oil settled above 100 in the WTI for the first time last night. Currently trading around the 104 to 105 area at the moment. And as we sort of suspected, that complacency around, this entire situation basically being, very much underestimated and slowly starting to creep into the equities market overall. Look, we've got obviously now the Houthis being part of the conflict means that there are two straits now, and don't make me pronounce what this strait is here, but the Hormuz, this is about 5 or 6% of global oil. They can go around, but it adds an extra 16 odd days to 20 odd days getting it to Asia, and it's obviously fairly dangerous shipping around that around the bottom of Africa there, and then Hormuz being closed as well, and the attacks have really not let up as it stands at the moment. The US has backed off somewhat, but look, as you can see here, the amount of attacks launched by the Iranian proxies, really, sitting above that long-term average there now. We've had a bit of a surge, particularly in the last few days. We're only a few hours into March 31st, and we're already seeing, them nearing the average basically. So, and these are all verified attacks overall. We really, not seeing any sign of this let up as it stands at the moment. Into any of the, the overall propaganda that's going on from both sides, there's really not that much point. As you can see here, with the AI sector really being hit quite hard, the chip sector, the industrial sector had a little bit of a big tone. I mean, the Dow did eke out a small gain overnight. Some of the Mag 7 were still doing okay overall, but as I say, the industrials here hit pretty hard. Tesla drifting off, and then this section here in that sort of the chips and memory. So Micron continuing to get belted. Very thankful we picked up on that news story early from Google. And got people out of their memory chips, because that was a huge leap forward and really does supply, solve that supply gap that was, or that shortage that was going to be going on overall. We really have seen. I mean, particularly the big point here is that we've got every single index or major index in the globe at the moment in either strong sell or sell territory now. On the daily, the Nikkei, the only one holding on the weekly, actually at neutral, and I dare say we're probably going to continue to slip significantly lower. So we did have a little bit of buoyancy mid-session as we had Fed Chair Powell talking at Harvard. He basically said something around along the lines of there being, they're going to still continue to look through this shock, and that brought bond yields back, back down a little bit, and but the Mag 7 really did continue to deteriorate overall. 5 of the 7 are officially now in bear market territory, down more than 20% from recent peaks overall, and I think we'll be looking to, towards this earnings season that'll be coming up over the next month as extraordinarily pivotal in terms of, in terms of how this market is going to be able to hang in there overall. Look, I don't think you'd be going anywhere near this really, in terms of on the buy side with the technicals that bad there at the moment. Gold and silver, thankfully that correlation now starting to go back to normal. I think the speculative money's been largely knocked out. Is still probably just due to margins, but I dare say that there'll be a point in time where the gold and silver miners will be extraordinarily cheap again. But gold and silver hanging in there overall, which, in the face of a US dollar at 10-week highs, or I think it's 10-month highs. Crude, as I say, crude just continues to plow higher. So, and we're still seeing weakness in uranium. Lithium's still pushing higher. Coal's been the quiet achiever as well. It's up around about 50-odd%. Iron ore's been generally hanging in there, and but all eyes really are on this on crude oil basically. There was a good interview with Bloomberg, but I'll preface this with saying that it was with a fellow from 9 Point Capital who is an head energy trader, and it's an energy fund. Basically saying that if this doesn't play out by the end of April, into June, we're looking at potentially the largest oil shock in history. So COVID was 870 million barrels. The Strait being shut at the moment, even with the current level of traffic, we're losing 11 million barrels a day. So you get to that sort of 80 to 90 day mark, and all of a sudden, we're getting way up there in terms of, and then obviously then that disruption has to be sorted out, and I do believe that Q8's had damage to infrastructure that would take probably 3 to 4 months once all this stops to basically come back. So yeah, we've currently got oil at the moment at around about 104.85. It did finish largely on its highs. Brent well into the teens, so we're obviously going to go and probably hit those, go and test those highs there, and we really, if you really need to be probably having a very hard look at your portfolios now. We were sort of lulled into that false insecurity initially with Trump, and how well sort of Venezuela went in terms of not any large international backlash, etc. But now we're stretching towards the 30-day mark. We've got between a 20 to 30% chance of the Strait of Hormuz being, probably closer to the low 20s, Strait of Hormuz being open by the end of the month. We did a study early on in the piece that probably put it between April and June. That's looking, that probability now is probably looking, even stronger, as the Iranians don't even look like yielding at this point. I think there's been a fair bit of troop movements from the US. Their special ops guys. I think there's even more than the 3,500 that they've said that they're going to push to the region coming, but they've the 3,500 apparently have already arrived, and in the background you've also got there's domestic issues going on in the States as well. They've only just got the TSA workers back to work. That was an executive order from Trump yet again. So basically at the moment the US is running flat out running a dictatorship. I don't think anything's going through Congress anymore. Certainly not any of this any of this Iran stuff. I think President Trump and the Trump administration have pretty much sealed their fate in terms of the midterms, which is probably going to lead to further dysfunction when it comes to the US government and US dollar for the rest of the year once those midterms are over. So, at that point, this positive US dollar thing where net energy exporter is a plus, etc. Will start to fade away and probably start to crumble, and then you'll start to see that particularly gold and silver reaccelerate again. We got RBA minutes today. We've also got private sector credit coming up in the rest of towards the end of the week. We've got job openings coming out in tonight's session. Maybe, which will give a little bit of a lead into the payrolls numbers. But importantly, the payrolls numbers will be released apparently on Friday. But as we all know, that is Good Friday, so the market will not be open to see them come out. And then you're going to have ongoing concerns around, around the Iran conflict. So as it stands at the moment, I think the SPY was slightly up. Most of the damage was done yesterday. We also had the the fuel excise halved here in Australia, which will obviously damage the budget, but will probably be good for consumers and probably brought back a little bit of a bid tone in some of those consumer stocks, etc. It'll help the economy along, hopefully. It'll only be temporary, and they have said that it might take quite a while for it to filter through. Strange how the prices filter through immediately when the oil price goes up, even despite the fact that they bought those shipments, months prior. But this will take several weeks to come through. It just feels very toothless tiger. But look, if you want to get your portfolio checked, it's obligation free. We're not salesy here at MPC. We can do it. We can run you through it. It'll give you clarity around your current portfolio, alignment to where our house view is and what we think is going to go on, strategy and steps forward as well. And beyond that, if you don't want to be hassled, we're going to leave you alone. So we're not like other firms where you just go on the rotation and get hassled within an inch of your life, and bullied into things. Now's probably a pretty good time to be having a look at Mosaic, the research and update and the verified stats that are going through and the recommendations and things, all very, all very poignant at the moment. Clients have been from everything from that, leap forward in technology from Google in the memory stocks to shifting people out of obviously cyclical names into this. And we also bought oil a couple of times over the last few weeks as well. So well worth it. It certainly would pay for itself for most portfolios, even small portfolios. So scan the code there and you can get Mosaic for free. You get the content. You just don't get the recommendations. So there's still some value there. But have a good day, people. As I say, highly recommend reviewing those portfolios, whether it be with us or with your broker or whoever. If you're self-directed, make sure you go back through there and make sure you're sticking to your plan. And we will speak again tomorrow.